Hey everyone, my name is Daniel and welcome back to another video. I hope all of you are having an absolutely phenomenal day out there. As always, here today, we need to talk about HIMS stock, which just reported their Q3 financial results. I've been buying the stock heavily over the past couple of weeks and actually increased my position even more today. So in this video, let's go through exactly what went down here today. What did HIMS report? Not just their financial results, but a pretty major update when it comes to their actual app launch, as well as some long-term valuation targets, which are now updated given to this revenue beat. And we'll go through exactly what HIMS is as a percent allocation in my portfolio and where I want that going over the long run. So if you end up enjoying this video and potentially even end up finding some value in it, please consider subscribing. And if you are new to HIMS as a stock and company, feel free to check out the link in the description down below to check out my analysis and introduction to get a better idea as to what they are. So here we have it, HIMS stock down 4%, and this comes after, again, a pretty major earnings beat, which we'll go through in a moment here. But, HIMS stock was up nearly 10% after hours yesterday, pretty much right after these results came out. And the stock did open up pretty significantly at right around $8.50, hit a high of $8.62, and really dwindled throughout the day. Now, as investors, we got to take a look at this, say, hey, is this movement downward justified, or is it just a lot of FUD? And, in this video, I hope to kind of communicate and analyze that with all of you. Now, analyst expectations for this quarter were set at right around $70 million. And when we look at the actual press release here, we'll see that they reported $74.2 million, a pretty significant beat. Now, this includes 79% revenue growth year over year. And in addition to that, 95% growth in their actual active member subscriptions to 551,000. Massive growth. On top of that, exceeding that Q3 2021 revenue guidance, they raised their full year 2021 guidance. Let's go through the numbers a little bit more in depth. Here we have Andrew Dudum, the CEO and co-founder of HIMS. Latest quarter of financial results show that our vision to create a new front door to healthcare is resonating. Not only did we deliver strong revenue growth in Q3, we did so while maintaining customer acquisition costs quarter to quarter, nearly doubling total subscriptions year over year, and delivering on strategic initiatives to catalyze future growth. We believe we are very well positioned to deliver on our ambitious mission. Very interesting here. Let's go through the actual numbers. We'll see average order value throughout the quarter has remained pretty stagnant and stable over the past few months. So I actually look at that as a bit of a positive, saying that, hey, the people that order from HIMS are, generally keeping the amount they order pretty stagnant when it comes to actual order value. So, that's kind of what I like. A stable business, heavily based off of subscriptions, which we'll see. Net orders did increase, but subscriptions increased massively from 453,000 to 551. So let's do the actual math here. 453 divided by 551 minus 1, roughly 18% growth in subscriptions quarter over quarter. That's massive growth, right? That's incredible to grow your subscriptions by nearly 100,000 in a single quarter for a company of this size. And again, it really does speak to the efficiency of what they do. And not just that, but the actual quality of their product. The people that are signing up for subscriptions are continuing to subscribe to HIMS products, get them on a regular basis, and are clearly enjoying it. So, a flat out positive there. Again, one of the reasons I like this company is because they're very predictable. They're a growth company, but they're very similar to a SaaS company in the sense that a lot of their money comes from subscriptions, which are stable, high growth, and actual advertising dollars pay back for themselves over time. So again, here we have it a little bit more broken down. $72 million coming from online, alongside $2 million coming from wholesale, which was a little bit down. Now, I wouldn't be too worried of this figure because it is smaller, and we do also have that massive Walgreens contract that they did sign just a couple of weeks ago, expanding into pretty much all Walgreens within the United States, which should be again again, provide a nice bump to this number. Wholesale is something that they do plan on expanding into over potentially the coming years, and with no doubt has a lot of potential. But obviously online is where they shined this quarter, going from $58 million to $72 million in revenue in the span of, again, just quarter over quarter. So phenomenal growth from that standpoint. Keep going here. They raised their actual potential guidance for the fourth quarter of 2021 to expect revenue in the range of $76 to $78 million. And in addition to that, raised expectations for full year 2021 to right around 264 million, give or take $1 million. So we take a look at, previous guidance here. When it comes to analysts who expected 253 million, they're actually going to beat that by $10 million. So, this company's growing substantially. And, not just that, but their actual sequential growth is beating expectations, which is, phenomenal. Not only are they growing fast, but they're beating even their own expectations. Now, the main kind of negative from this actual report, and this is probably one of the only negatives, is the fact that they did report a pretty decently sized loss of right around $16 million. Now, their actual operating income loss was closer to $27 million. They did get some rebates in terms of a change in fair value of liabilities and some income tax provisions, but a lot of this money that they kind of quote unquote lost came from marketing. Marketing expenses did go up pretty significantly. And, this is kind of what I want to go off of and kind of take a bit of time to talk about, because it is a pretty decent concern. But when I look at HIMS, they're a company, rather, I almost said crumpany. They're a company growing significantly, right? 70, 80% revenue growth year over year. That's massive. And to grow that significantly, you're going to need to spend money on marketing. Now, the only reason I'm fine with them spending this much money on marketing is because when they acquire a client, they're going to keep that client and that consumer for not just one or two purchases, but potentially for the next few years, if not even longer. HIMS isn't like a car company, which generally spends ads to get people to purchase one vehicle. HIMS spends money on advertising to get people onto their products and to get them buying their products, not just once, but again, for years to come on a pretty much a monthly basis. So I look at this and I say they're spending money now on marketing, but this will provide a massive, massive benefit for the company in the years to come as they grow out their clientele and grow out their massive client base. I look at marketing and I say, hey, they could have been profitable, but instead they chose to spend some of their money on marketing to grow their user base. And I'm completely fine with that, given that this company has literally $260 million or $250 million sitting on their balance sheet in cash and short-term investments, and total liabilities are only $65 million. That means this company could literally pay back all of their debt and still have right around $180 to $185 million to spend on what they want. So if they want to increase their marketing budget, and if they do actually mention the fact that a customer acquisition cost did remain stagnant, if they want to do that, and if they're being efficient at doing that, I'm completely fine with it. And, again, that's the main negative of this quarter. They spent more money on advertising. I'm fine with that. And I'm willing to push through it, given that the long-term vision of this company hasn't changed and, in fact, has actually improved given this actual increase in guidance. We do actually have some cash flow statements here if you are interested in that. And that's about it. A pretty good quarter, to be completely honest. Now, before we go through the actual news about the launching of the actual HIMS app, let's take the news that we just got, digest it a little, and actually put it into our long-term price target, which I actually have a spreadsheet right here, going kind of through my projections. Now, originally, again, we expected $254 million in revenue off of 70% revenue growth, but given this increase in guidance, they're now guiding for closer to 80% revenue growth. So we take this 77.5%, and you'll see all of the numbers change in 3, 2, 1, and you'll see that at this point, pretty much everything changes when it comes to actual projections. And it is truly incredible to see this company beat on earnings. And, especially in the time that we're in right now, where obviously supply chains are messed up, where inflation is off the charts, for this company to continue growing their revenues, that's a feat that, and not just beat or kind of continue growing their revenues, but actually beating original analyst expectations. That is something that not many companies can accomplish, and that makes me very, very confident here moving over the next few months to make this a major core position in my portfolio. So again, upside still there. We see potential upside over the long run, potentially going up after this news. And in addition to that, we saw the share price decline. And, this actually doesn't update, I think it updates at night. But, the share price is right around $7.80. So if we actually put this to 780, you'll see the actual compounded annualized growth rate increase substantially. And, I'm looking at, potentially like a 20% return over the next, year in and year out when it comes to the stock market. And I'm looking at HIMS right now and I'm saying, hey, this company can actually beat that. So I'm looking at all of this, a lot of positivity. Let's go through exactly what this next piece of news is, and then we'll go through exactly what I'm talking about when it comes to allocation. So we also had them unveil their actual their actual app for subscription members, which now total nearly 550,000. They unveiled this. Again, their plans to provide a more complete, holistic, and personalized care experience with the launch of the HIMS and HERS mobile app. The company intends to begin rolling out the app to its over 500,000 subscription members in the coming weeks. Streamlined education, original content, community support, access to treatment and oversight, that's something you can expect. More of a personalized experience. They did actually talk about on the conference call, from my understanding, about how, this app does really speak to the generation and the target audience that HIMS is targeting, and hopefully we do get more engagement with the launch of this, because you're going to be able to click on an app instead of having to go to Google, go to HIMS, sign in, do whatever you need to do, all done through an app. That does increase engagement in a massive, massive way. The app will help accelerate the expansion of and access to the HIMS and HERS health and wellness platform and supports the company's vision for the future of healthcare. The rollout puts the company in the strongest possible position to holistically promote long-term health and wellness rather than just treat individual conditions as they arise. Again, more of a structured long-term approach rather than just individual treatments. Again, focusing on that long-term customer retention. You have a little bit here. Again, I just highlighted some of the more important things. I will leave this linked in the description down below if you want to, again, potentially read this a bit more in depth and actually analyze it. But, a lot of, phenomenal things here. Just a brief overview, what to expect here. The app will provide customers with access to curated content based on their HIMS and HERS account, 24/7 concierge services, ongoing access to medical experts, and the ability to schedule consultations, and the ability to both purchase and manage HIMS and HERS non-prescription products and subscriptions all within the app. What a phenomenal update. I'm really, really excited about the future of this company. And this report, again, I can't stress this enough. So many companies are missing on profits, missing on earnings, given the inflation and given that the supply shortage and crisis that we're in right now when it comes to supply chains. The fact that HIMS is beating on revenue is a big, big deal, big positive, and I'm really confident in this company over the long run. So, I've upped this to 7.5% of my overall portfolio. I've said this before, I'm going to say it again. I like this stock under $8 and will continue to buy it under that $8 range. I see this getting to 10% of my portfolio at some point over the next few weeks here, if not closer to 15%, to be honest. I'm really bullish on this company, and I think, it's been just so beaten down here over, not just the past few months, but really the past year or so, ever since they went public after that massive rally at the end of 2020. Back then, you could have made the argument that HIMS was an overvalued stock, right? But it's a year later, they've grown revenues by 80%. And in addition to that, the valuation has come down substantially, from their $28, $25 high that they hit back in February, and is now trading below the actual IPO price of $10. So I'm really interested. I love this company. Let me know what your thoughts are in the comment section down below, but this is one that I do want to cover a little bit more regularly, as again, this isn't a stock that's run away. This isn't a stock that's overvalued. This is a stock that has stable revenue growth, has a great business model, subscription-based revenues, ridiculously profitable, and a lot of long-term potential with a great balance sheet. It checks off all the boxes for me. We'll see what happens, but I'm really looking forward to, again, making this a core position. Let me know what your thoughts are in the comment section down below. I really do appreciate each and every one of you for watching till the very end. Feel free to hit that subscribe button if you ended up finding some value in this video, and I will see you all in the next one. Bye-bye.